Thank you, operator, and thank you all for joining, and I apologize for the delay in the start of this call for several minutes. Thank you for your patience. So I am Limeade CEO Henry Albrecht, here to present our results for the first half year ended 30 June 2022. Joining me on the call this morning is Limeade CFO Todd Sparks. Please note on slide 2 our important notice and disclaimer. Certain statements in this document constitute forward-looking statements. Slide 3. Limeade is an immersive employee well-being company that creates healthy employee experiences. Today, millions of users at 800 plus companies in over 100 countries use Limeade solutions to reduce burnout and turnover and increase well-being and engagement. Limeade Institute science reinforces that improvements in these measures elevate business outcomes. Limeade has over 300 purpose-driven people across our 3 major regions, North America, European Union, and Asia Pacific. With the acquisition of TinyPulse in 2021, our Asia Pacific presence has grown significantly with operations in Vietnam. TinyPulse has been successfully integrated into the company as our Limeade Advanced Listening solution, which contributed to new customer growth and CAR in the first half. Limeade is a software as a service business with 96% of our first half revenue being recurring revenue, up from 94% at FY21. Limeade Wellbeing is our flagship solution, helping enterprises with over 5,000 employees infuse well-being into work, and this part of our business represents 78% of our June 30, 2022 CAR. Limeade EX targets large enterprises as well, with a few mid-market customers. Limeade EX is an employee experience platform with well-being at its heart. Limeade EX represents 9% of 30 June 2022 CAR. Limeade Advanced Listening, which incorporates the TinyPulse technology acquired in July 2021, primarily targets the mid-market with a secondary focus on large enterprises. It provides listening, recognition, and management tools and insights that build an employee engagement strategy that works. Limeade Advanced Listening represents 13% of 30 June 2022 CAR. Slide 4 highlights how Limeade infuses well-being into the flow of work to create healthy employee experiences for our customers across the globe. For these investors on today's call who are less familiar with our solutions, the flow of work refers to all the interactions and behaviors that employees engage in throughout their workday. We've spent 16 years honing our solutions for exactly this purpose across web, app, and mobile experiences. Our core functional capabilities shown on this slide can be personalized for each employee and managed by the employee and their administrators. These features are what sets Limeade apart from our competitors and why we are a pioneer of holistic workplace well-being solutions. Turning to slide 5, our market opportunity. According to Forrester Research, the total addressable market for well-being, listening, and recognition is $70.6 billion and is expected to show compound annual growth rates or CAGR of 12.5% through 2025. Our platform is uniquely positioned to help companies and their employees navigate the massive structural changes in the traditional workplace, with a significant number of voluntary quits or the so-called Great Resignation approaching 50 million in the US last year, 2021. Limeade Institute data reveals that 57% of employees surveyed feel very or extremely stressed, and near 1/3 believe their stress is unmanageable. Less than half of employees believe their organization cares about their well-being. Limeade is leading the way in delivering the essential resources employees need, resulting in happier, more productive employees. Turning now to slide 6, I would like to provide the key highlights from the first half for Limeade. Our CFO, Todd Sparks, will discuss some of these numbers in more detail later in the presentation. Our pro forma revenue of $27.1 million was up 1% on the PCP, with gross margins down 5% to 72%. The company recorded an EBITDA loss of $7.2 million, down $6 million on the first half of 2021. Net revenue retention, NRR, was 99%, up 6% from the first half of 2021, and is now higher than the 97% in NRR recorded in FY19, as we say, in the before times. We closed the half year with $2.6 million in cash. In early August 2022, the company extended and amended an existing line of credit with Comerica Bank. Turning to our customer results, we added 2 new enterprise and 105 mid-market customers for the first half, providing a new total customer count of 846, slightly up over last year. We serve 98 enterprise and 748 mid-market customers. Average enterprise car per customer was $509,000, up 2% on the prior period, with our mid-market car averaging $9,600. I would now like to hand the call over to Limeade CFO Todd Sparks to walk you through the remainder of our financials for the half year, starting on slide 7.
Thank you, Henry.
Todd?
Slide 7 highlight. Hello?
Go ahead. You're good.
Okay. Slide 7 highlights the effect of our R&D investments in driving improvements in our net revenue retention, or NRR, and late-stage pipeline, which covers the finalist and verbal stages of contract discussions with customers. Limeade net revenue retention has grown rapidly since the lows of Q4 FY21 to levels not seen since the COVID-19 pandemic at close to 100%. Our NRR is calculated by car at the beginning of the period, plus upsell and expansion car, less any reduction in car in that period through existing customers who terminate, decide not to renew their subscription or reduce usage of Limeade solutions amongst their employee population, divided by the car at the beginning of the period. Investors will recall the reasonably significant declines in NRR throughout FY21 were principally driven by the non-renewal or loss of several key customer contracts and misaligned indirect mid-market channel. We covered our late-stage pipeline growth at the Q2 investor conference call, but to reiterate, the company's finalist and verbal stage sales pipeline was $18 million, compared to the PCP of $9 million. We anticipate an increase in conversion to contract signings from the pipeline in the second half, consistent with historical trends in the business. Turning now to slide 8, our statutory income statement. The 1% revenue decrease was due to lower year-end FY21 car versus FY20, leading to lower revenue in FY22 versus FY21. The 6 percentage point decrease in gross margin, driven by increased resources need to implement customer upgrades to the Limeade One platform, which underlies our well-being and EX solutions. Limeade sales and marketing expense was 35% and 29% of revenue in 1H22 and 1H21, respectively. The increases in R&D spend were primarily driven by the addition of the Tiny Pulse development team and first half 22, and additional investments related to the Limeade One technology upgrade. The 24% increase in G&A were largely driven by increased legal and accounting fees incurred to support SEC registration activities, which we announced in August. Overall, the company recorded an EBITDA loss of $9.6 million and a net loss of $11.1 million for the half year. Slide 9 shows the adjusted pro forma income statement, which excludes the revenue write-down from purchase deferred revenue per GAAP, one-time transaction costs, and non-cash stock-based compensation expense. The net effect is a $1.2 million improvement in pro forma EBITDA loss to $8.4 million and the net loss improves by $1.1 million versus the statutory income statement. Turning now to slide 10, which shows the reconciliation between statutory pro forma and pro forma adjusted EBITDA loss. The company incurred $0.4 million in acquisition-related adjustments for the period due to deferred revenue adjustments. I remind investors that under U.S. GAAP, deferred revenue added in an acquisition is written down by the cost to service that deferred revenue. The resulting pro forma adjustment reflects the full revenue without this write-down. In addition, Limeade incurred $0.7 million in predominantly accounting and legal costs associated with the preparation of the Form 10 with the U.S. Securities and Exchange Commission, filed in August 2022. Stock-based compensation reflects non-cash share-based payments made during the half year of $1.2 million, resulting in a pro forma adjusted EBITDA loss of $7.2 million versus $1.2 million in the PCP. I would now like to turn the call back over to Henry.
Thanks, Todd. Turning now to our FY22 guidance on slide 11. We are pleased to reiterate our FY22 pro forma revenue and EBITDA loss guidance for the full year. However, our net loss after tax guidance has increased to a loss of $11 to $14 million from a range of $8 to $11 million, primarily due to SEC registration, increased stock-based compensation expense, and deferred software capitalization costs. Limeade guidance implies confidence in the company's return to organic CAR growth in FY22 and implies significant improvements in second half FY22 pro forma revenue, adjusted EBITDA loss, and NPAT loss compared to both the first half of FY22 and the second half of FY21. Slide 12. This completes today's presentation. I would now like to turn the call over to the operator for the question and answer session. Please go ahead, operator.
Thank you. If you wish to ask a question, please press star one on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star then two. If you're using a speakerphone, please pick up the handset to ask your question. The first question today comes from Tim Lawson from Macquarie. Please go ahead.
Hi, gentlemen. Thanks for taking my question. My question is around the updated guidance. Can you just talk through each of the parts of the movement and guidance and how much of that is an ongoing versus one-off cost?
Yes, I'd be happy to take care of that.
Would you like to take that?
Yeah. With you, Tim. Yeah, absolutely, Tim. So, there's three components to the NPAT. We incurred, as mentioned, $700,000 of legal and accounting fees to register with the SEC. Those were one-time expenses. There will be a little bit of follow-on into Q2, so that won't represent the complete year impact. So there will be some follow-on in Q2, but it'll be less. Then there's also, due to some stock-based compensation option grants and RSU grants that we made, there's some increased non-cash stock-based compensation expense. That's ongoing, and we always exclude that from adjusted EBITDA. And then lastly, there was increased software capitalization cost. We had to increase a significant amount of investment in R&D to meet our commitments to customers as they upgrade to the Limeade One platform. In terms of what's ongoing, besides obviously there will continue to be software capitalization and stock-based compensation, there will be some ongoing increases in expense to be an SEC registrant. But those costs that we're stripping out are one-time expenses associated with filing the Form 10. Is that clear?
Yep. So just in terms of the increase in software capitalization, just trying to understand how that affects the guidance and also you've restated your sort of confidence in the sort of the situation for the balance sheet, but if there's increased software capitalization and you think it's going to be ongoing, doesn't that impact the cash flow? So how do you reconcile those 2 points?
Yes. So basically, we've incorporated the increase in overall spend in R&D that we've recognized year to date in our cash analysis. That obviously then goes to the balance sheet, and then we amortize that to the P&L. And it's that increase in amortization that is reflected in the increase in guidance, as well as the stock-based compensation, which increased as well. But I would characterize the vast majority of the increase in our guidance is due to the full year impact of the Form 10 filing.
Right. Okay. Thank you.
Thank you. Once again, to ask a question, please press star 1 on your phone. We'll pause for a moment to allow parties to enter the queue. The next question comes from Sean Kumar from Chambers Global. Please go ahead.
Hi, Henry. Hi, Todd. Thanks for taking the question. So just a quick question. I know some of my prior questions were already addressed by some of the others on the phone on things related to reporting and reporting costs. Just more of a business and slightly reporting level question. I'm curious, just so investors can track the business a bit better, what's the general materiality threshold for reporting new car wins and new contracts? I know the SEC, the company, as well as the ASX probably have different thresholds, but just so we can understand kind of what type of new contract announcements would get their own kind of press releases.
Sean, that's a good question. I probably would defer much of that to the ASX itself because there is subjectivity to it. I believe it has to do with the perception of how much that could impact the movement of the stock. So I would say our internal rule, it might not be best to answer super specifically in that, but I would say certainly a top 5 customer add or churn would be within the range of that. I don't know if Thomas, our investor relations, would have anything to add.
For the stock.
I'm sorry, Sean, can you repeat that, please?
Oh, sorry. Yeah, I was just saying, so Henry, your point is, something that's truly material for the stock, the ASX makes pretty clear that, that of course needs to be disclosed, for an investor perspective. And then, I guess outside of that or below that threshold, is there some, discretion or guideline that Limeade prefers to follow, or do you tend to, go with the materiality guideline?
I would say, without getting too specific, I would say it's absolutely our intention to comply in every way with the letter and the spirit of the law of the ASX as our guiding light.
Okay.
Yeah, I would just add, Sean, that once we have effective SEC registration, if we felt that from an SEC 8K reporting threshold perspective, we had a material event, we would consider disclosing that obviously as well.
Got it. Okay. And I apologize, I had to miss the very early part of the call. I had an overlapping call, but can you remind me, just with your new registration, will you now be providing kind of, let's assume once the registration is done, will you be providing, close to full financials, including CAR and, 3 statements on a quarterly basis?
So, Sean, this is Todd. Yes. The intention is once SEC registration becomes effective, which is typically 60 days from filing, that we would begin reporting as an SEC registrant, meaning quarterly 10Qs along the timeline of an accelerated filer, obviously 8Ks, and all the rest of the SEC filings And as part of that, we, of course, would provide each of the three financial statements, the income statement down to EPS. We would also provide GAAP and non-GAAP with a reconciliation between the two. And our intention is to provide that in our quarterly earnings calls going forward.
Got it. Okay. Thank you.
Thank you. The next question comes from Jules Cooper from Shaw and Partners. Please go ahead.
Hi, guys. Good morning, and thanks for taking my question. I may have missed it, but are you able to confirm the CAR at the end of the first half, and then whether there were any sort of currency impacts if we compare it to the FY21 figure of 56.8? And just on that, I was just multiplying the average enterprise amount versus the customer count and doing the same for the mid-market, sort of getting just a little over 57 million. But just wondering if there's anywhere that I've missed that was actually stated, and if you could talk about the currency impact, if any, that would be great.
Todd, why don't you take that as well?
Yeah, absolutely. So, we have not, Jules, disclosed CAR at the first half. And so we're not going to make a change at this juncture. I can tell you that foreign currency impacts were fairly negligible in the 1H period, certainly compared to the PCP. And I'm sorry, was there a third part of your question?
Yeah, is it unreasonable to be taking the average enterprise CAR value timesing by the closing enterprise customers and doing the same for the mid-market to estimate what the CAR might have been for the end of the period? Is there anything wrong with that math?
I think that, I haven't actually done that calculation on the fly, but I would think that seems like a legitimate kind of approach.
Yep. Okay. All right. Thank you.
Thank you. The next question comes from Derek Rivas, private investor. Please go ahead.
Hi, Eric Rivas here, former co-founder and CTO for Limeade. I love Limeade, the purpose, the mission. I was just wondering about big initiatives that Limeade is doing that would help improve shareholder and employee, value. I know, the stock has been as high as $1.50 Australian, and now it's 24 cents. So just curious what the thoughts are there in terms of growth.
Yeah, so we have several. Thank you, Eric. Long time no talk. Good to hear your voice. We are making significant investments in our product and R&D and technology, which are starting to yield results. I think those results can be imputed both as our net revenue retention at 99% in the first half of the year versus 93% at this point last year, as well as our late-stage pipeline, which is almost 100% greater than it was at this stage last year as well. So I would say significant product and technology investments, including in our Limeade One platform, everything from infrastructure, privacy, security, agility, performance, et cetera, as well as usability and new features that our customers desire. One example of those new features is what we call our well-being in the flow of work initiative, where Limeade experiences appear seamlessly in interfaces such as Microsoft Teams. So that's been a prominent part of the return to growth that we've been speaking about. Regarding your question about the stock price, I don't feel qualified to speak on the behalf of all the new or existing investors or shareholders on the stock price. We believe that the second half we will have the organic growth we've spoken about in the past. We are working hard towards high levels of success with net revenue retention and customers converting a large percentage of that late-stage pipeline. And in terms of our path to cash flow break even, The success of several cost-saving initiatives are yielding results, even in the face of some significant new one-time expenses, i.e. the SEC registration costs. So I can't really speculate on the stock price, but thank you very much for your question.
Thank you, Henry.
Thanks, Eric.
Thank you.
Take care.
At this time, we're showing no further questions. I'll hand the conference back to Henry for any closing remarks.
Thank you, everyone. Thank you, operator, and thank you, everyone, for joining today's call. We look forward to a much improved second half for Limeade and look forward to updating all of you on our progress for the remainder of the year. I do hope to see some of you in person in the first half of December when I plan to visit Australia for a series of investor briefings. Onward. Thank you.